We're going to be taking questions from some of our listeners that sent in questions through Ask Nate at Retirement Rescue Radio. And Josh is going to read some of those questions, and I'm going to go ahead and answer them. So, Josh, what do we got today?
Stan says, I've dabbled in trading options in my IRA over the years, but never had the time to master it. I'm retiring in a year, and I feel that once I have more time to spend on it, I'll be able to meet all of my retirement income needs this way. Is that a reasonable assumption?
Ooh, I feel like that's a loaded question. It could be. It could be. I don't know you, Stan. I will say this though. What I do know, I actually have some experience trading options and commodities and whatnot for a few years, and was actually very successful at it. After a while, though, understanding the volatility and how quickly assets can either go up or tank very, very quickly. I didn't like it. I did not like it at all. I don't think I'm built to be a day trader. That's not the type of investor that I am. And that's probably why I work with mostly retirees, is because that's not what they're looking for. They're not looking to take on a lot of risk. And so if you got really good at it, it's like, could you meet all your retirement income needs that way? It's like, yeah, you could, but knowing the risk that's involved with that, do you want to? And I would also ask Stan, if you're married, would your wife be okay with you doing that if you lost everything, right? Or would it make more sense maybe, because I've had a lot of clients that have done this. Some people do want to have, let's say, a slush fund or a fund, a trading fund, something like that, that they do have access to, that they can play around with, and they can make some of those decisions with. But with the bulk of their assets, with the bulk of the retirement, assets that they have to live off of for their entire life, they don't necessarily want to risk those, and they want a little bit more of a certainty that they're going to have income coming in. And so with this, that might be maybe a little bit of a compromise between the two. Maybe there's a way that we can make sure that you, and if you are married, if you do have a spouse, I don't know, I'm trying to get you married here now, Stan. Sorry about them playing matchmaker. But if you are married, then we would want to have a conversation with your wife too, to find out if she would be comfortable with that, or if you guys would like to have some type of, consistency and security to the retirement income that you're going to have. And then you've got this other chunk that you can continue playing with. So that's what I would recommend, is maybe a little bit of a hybrid of the two, not all one and all other, because I don't think you'd be happy with either one of them, because God forbid, some of those trades end up going the wrong way. And then now you would have to explain to your wife, or if you're single, you have to really come to grips with it yourself, that you did just lose all of that money. And now you may not be able to meet all of your retirement income needs that way. And so that's what I would be. I'd be very, 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 very aware of the risks that are inherent with that. And also, people are very, very emotional with their own money. And so if things do start to go the wrong way, there's so much behavioral finance or behavioral investing information out there that says that smart people will do dumb stuff with their money when emotions are at play. And so that's why I would recommend that we probably would want to do some type of a hybrid compromise plan with your situation there, Stan. So once again, if you would like to have us take a look at that, we'd be happy to. Just go ahead and click that link.
Yeah, I dabbled in that day trading stuff too, and I wasn't quite as successful. I was doing good one week and not so much afterwards. But kind of like the stock market, it's not just an up and down game for the money. It's an up and down game for your emotions as well.
Yeah.
So definitely take that into consideration.
And that's what I found too on the trades that I had that were more successful than others, was because I kept emotion out of it. The ones that ended up not being so good were the ones where emotions started to get the best of me. And so that's why you kind of might have to have some type of an arm's length away from your investment decisions. And that is really where advisors come into play and can offer a heck of a lot of value. And I mean, just take what happened here recently with the coronavirus and all the ups and downs and the very fast swings that happened. Some people, if they moved to cash as it was going down, but then they didn't get back in at the right time, they actually could have done worse than if they just would have left it in those same investments and let them come back. And so, yeah, emotions can play a big role in investing. So yeah, I would just be very, very cautious there, Stan.
It all provides a learning curve, though.
As always, guys, if you want more confidence in your retirement, our contact information, our calendar link is going to be in the description. So don't forget to smash the subscribe button, hit that notification bell so that you can be notified every single week when we get new content going on. We also have another YouTube channel for our podcast called Retirement Rescue Radio, where we also dive into a lot of topics very deeply. We do that long format, sometimes half an hour to an hour is what some of these can be. And so once again, guys, appreciate you sticking around here. Join us next week, same time, for some more content to give you the information that you need to empower you to live the retirement that you deserve. Take care.